Welcome to The Explainer. Today, we're diving headfirst into what is basically a corporate thriller. It's got massive global ambition, intense strategy, and insanely high stakes. We're talking about Revolut's FinTech expansion gamble. Look, this isn't your standard, dry business case study. Nope, it's a high-stakes game of 3D chess played out on a global map. The prize? Total market dominance. But the penalty for a wrong move? Absolute, catastrophic failure. So think about this for a second. What if expanding into a new country could unlock millions of new users or completely, utterly fail just because of one regulatory hurdle? In a normal industry, you launch a product, people want it, boom, you win, right? But in financial technology, you could have a million super eager customers lined up, and it means absolutely nothing if a local government decides to just pull the plug. And that brings us to our main player, Revolut. They're an absolute titan in the fintech world right now. But for them, growth isn't just about raw consumer demand. It's this incredibly delicate, high-wire balancing act. It's about regulation, it's about trust, and it's about timing. You literally can't just throw together a slick app and hope for the best when you're dealing with people's life savings. Raw demand just isn't enough to survive here.
Okay, let's dive into the global expansion gamble.
To really grasp the sheer scale of what they're doing, you've got to look at their velocity. Revolut didn't stay a simple UK banking app for very long. They aggressively evolved. They added payments, currency exchange, then layered in complex investments, crypto services, the whole shebang. Today, they serve tens of millions of users worldwide. Their trajectory hasn't just been fast, it's practically defied gravity, going from a niche travel card to a multi-billion-dollar financial powerhouse in what feels like overnight.
But, here's where things get really complicated. When a normal tech company, like a social media app or a mobile game, wants to expand, what do? They translate the text, push an update to the App Store, and bam, they're international. Fintechs cannot do that. They're guarded by these massive, impenetrable licensing barriers and insanely intense financial compliance rules. Silicon Valley loves to say, move fast and break things, right? But if fintechs break things, entire economies suffer.
Which brings us to the allure of new markets. Because, let's be real, if the risks of crossing borders are so incredibly high, why not just stay safe at home? Simple. The rewards are just irresistible. We're talking about capturing completely untapped customer segments, unlocking exponential, massive revenue growth that you literally can't get in a single country, and scaling into a true global household name. The financial upside of actually successfully planting your flag in a new market, it's astronomical.
And that prize is especially huge in regions with underdeveloped banking systems. Places where physical bank branches are super rare, but man, mobile phone adoption is sky high. Imagine millions of people walking around with the infrastructure for global finance right in their pockets, just waiting for an app like Revolut to hand them the keys to the global economy. It's basically a modern-day gold rush, and the land grab is fully underway.
But hold on, let's slow down and look at the 4 expansion risks.
Because stepping into that gold rush brings some seriously hidden traps that can easily destroy a company. Step 1 is regulatory complexity. Getting the right licenses can literally stall a launch for years. Just look at the multi-year bureaucratic nightmare Revolut faced just to secure a permanent UK banking license. Step 2, trust and credibility. You're a foreign company asking locals to hand over their paychecks. Proving you're reliable is a monumental task. Step 3 brings fierce competition. You're up against entrenched local banks and domestic fintechs who already know the culture inside and out. And finally, step 4, operational strain. The massive cost of keeping up with compliance, localizing products, and running multilingual customer support, it can bleed a company dry.
So, this creates the ultimate strategic dilemma.
Now, what's really fascinating here is the core choice they have to make. They have to choose between aggressive breadth or deeper penetration. Basically, do you rush in, planting your flag in as many countries as humanly possible, as fast as possible, or do you pick just 2 or 3 key markets and dig your roots so deep that local competitors can never, ever pull you out? Think of these options like battle plans in a war room. Option 1, the rapid strategy. It offers dizzyingly high growth potential, sure, but catastrophic regulatory and operational risk. You get that global presence fast, but you risk massively overextending. Option 2 is the focus strategy. Much lower risk, but significantly slower growth. You built an ironclad local presence, but you risk letting your competitors steal the rest of the globe while you're hyper-focused. Which leaves us with option 3, the phased strategy. The growth is sustainable, the risk is moderate. You enter selectively, scale gradually, and carefully adapt to the local rules. And honestly,
Data shows this phased approach is often the only viable battle plan for real long-term survival.
It all comes down to scaling fast versus scaling smart.
To survive this global minefield, a giant like Revolut absolutely has to nail 3 distinct pillars perfectly. First, impenetrable compliance frameworks. Their legal and compliance teams have to be just as sharp and innovative as their software engineers, period. Second, strategic local partnerships. You can't fight local culture and entrenched regulators. You have to integrate with them to gain instant credibility and navigate all those complex nuances. And third, adaptive product offerings. What completely disrupts the market in London might crash and burn in Tokyo or Sao Paulo. The app has to mold to the local market, never the other way around.
Which brings us to the absolute most crucial insight of this entire story. In highly regulated industries, speed alone is not a competitive advantage. Compliance is. In the tech world, we worship speed, right? Being first to market is everything. But in FinTech, explosive growth without regulatory alignment isn't an advantage. It is a spectacular, guaranteed path to failure. Strict, rigorous compliance, that is your ultimate competitive moat.
So the next time you're scrolling through the news and you see a massive fintech making headlines, boasting about launching in a dozen new countries, look past the hype. Ask yourself, are they scaling fast or are they scaling smart? Because in the high-stakes game of global finance, only one of those strategies will actually keep them alive.